Alright, so welcome to this market forecast. Now, as you can see on this chart, this is all bearish. But then, given the time of the year, when I saw this rejection block get hit and rejected and price closed above this open, showed some strength, I was looking for higher prices. I was targeting these bullish targets up here because this time of the year, just before March, we're expecting a high to form. But it seems the high has formed already because look at this. This is a daily suspension block. This is my daily chart. I have the settlement turned off, so you see price rally, but it does not close above the suspension block. This tiny volume balance up, volume balance down with an inefficiency that makes the suspension block. So price does not close above this suspension block. The bodies go out of it, but the bodies stay in it. The wick shows go out of it. Eventually it rotates lower and starts rejecting this level as well. So price has stayed in the consolidation. This is not this is not low resistance. This is high resistance in liquidity run conditions. Even on daily chart, you can have high resistance in liquidity run conditions where the bodies are staying, or the ranges of the candles are staying in the same place. So from this low to this high, you can see it marking the same range over and over again. We're going nowhere, just marking time. So at this point in time, we're getting into March, so the high seems to already be in place. I'm looking for, as we transition into bearish seasonal tendencies, of course the bias is turning bearish. Bias on the chart is already bearish. This is clearly lower and finding resistance at the daily suspension block. So at this point we can find new wick opening gaps, this and this. This is LLOD new wick opening gap, last line of defense new wick opening gap. These two arrays, the first being the last line of defense new wick opening gap, and the weekly discount wick consequent encroachment. So because the weekly chart, you see discount wick, this is its consequent encroachment right here. Price is rejecting them with the bodies. The wicks are going below, but the bodies are staying above. So I was looking to see this be the last line of defense for bullishness. So if we invalidate this, we're clearly bearish and we're getting to bearish targets like 24,150 and lower targets as well. But then we have not yet breached that with the body. So going into this week, I'm looking at a bearish outlook, but then I want to see it confirmed with a trading below and closing below this last line of defense new opening gap. As long as you stay above it, longs are low probability really, and shorts are also low probability because we are not yet below this array. You can see price finding resistance at the new opening gap high. That marks the high of this consolidative range. I don't want to see this high taken out if we're going to be bearish. So if we're going to be bearish, I don't want to see another stab into this daily suspension block. It should have already stabbed there. I want to see just reject. This is another BC. We've gotten to it and gotten lower. I want to see us reject and go lower. That's what I'm looking for. Also, it's clear that a closure below here will confirm bearishness and will move to more ambitious bearish targets even below 24,150. And for invalidation of this bearish outlook I have on the week, I'm going forward into March. Invalidation will come in the form of this high. If this high is rated above, if this daily suspension block is traded and closed above, trading above this or trading even to the upper half of this daily suspension block invalidates bearishness, and a market structure shift above this high, or rather an inversion of this daily suspension block, will be all I need for bullishness, and I'll be targeting these highs and other highs. But that will be very cautious, very precautious, because we're getting to the time of the year where we're expecting a high, we're expecting to see bearish price action. So the seasonal tendencies are going to be bearish. If we're going to trade higher, that will be very suspicious, and either that means we're in for a really solid rally to buy side, or it's manipulation. So we just need to be very cautious about that. But for this week, I'm bearish, looking for lower targets like 24,150 and other lower targets I'll show you in consequent releases. So keep focus on the daily reviews rather. I'll share my lower targets as we trade down. if we trade down, but for now we're stuck within this range and we're called on to be cautious. We're looking for a break below or close below this last line of defense areas, and that will really show that we're going to go down. So that's been it for this. If you found value in it, hit that like button, subscribe to the channel, and I'll see you in the next video.